dropped to 9.5% in October from 11% in September. In simple language, food prices were 9.5% higher than they were a year ago, but the pace of increase is slowing month on month. Food prices actually fell by 1%, which tells us that prices for staples such as cereals, tubers, and vegetables increased in October compared to September. And here I'm talking about the month-on-month change. By contrast, if you look at the data, we see that non-food inflation, which includes housing, clothing, transport, education, and other services, declined to 6.9%, down from 8.2% in September. On a monthly basis, non-food prices rose slightly by about 0.04%. This implies that food is driving much of the overall decline in inflation, while non-food items are now relatively more stable. We also distinguish between locally produced and imported items. Inflation for locally produced items fell from 10.1% in September to 8% in October, a significant improvement. Month on month, local prices fell by 0.7% between the 2 months. For imported goods, inflation edged up from 7.4% to 7.8%, with a month-on-month increase of 0.3%. Inflation is also classified as goods and services. And how do the numbers look like for October? Inflation for goods like rice, soap, or fuel slowed sharply to 9.3% compared to 11.2% in September. On a month-on-month basis, goods prices fell 0.7%. Inflation for services such as transport, education, or repairs eased more gently from 4.8% in September to 4.6% in October. However, the cost of services rose by 0.5% between the 2 months. Now, because goods make up nearly 3/4 of the CPI basket, this slowdown is particularly important. When goods inflation cools, households feel it directly in their daily spending because it constitutes a very significant proportion of the CPI basket. Inflation remains uneven across Ghana's 16 regions. In fact, the Northeast region recorded the highest inflation rate at 17.3% in October, down from 20.1% in September. Prices, however, declined by 0.8% in the region between September and October 2025. The Bono East region, on the other hand, registered the lowest rate of inflation at 1.1%, down from 1.2% in September. So we can see some stark differences between inflation rates for the regions. Whilst Northeast is recording 17.3%, we see Bono is recording 1.1% with very significant difference. Now, prices dropped much sharper in Bono East by 3% between September and October 2025. These sharp differences in inflation across the regions often trace back to transport costs, food distribution, and market access. Ladies and gentlemen, let's look at trends in year-on-year food and non-food inflation. As we see on the screen, food inflation has plunged from 28.1% in February to 9.5% in October, giving households real relief on their biggest expense, though prices for food remain unpredictable, fluctuating on month-on-month basis. Non-food inflation has also fallen, as we can see, from 20.7% last November to 6.9% in October, in a steadier trend that covers housing, transport, services, but with its own month-to-month swings as well, as we can see. The implication of this is very, very clear. While overall inflation is easing, volatility in both food and non-food prices means families, businesses, and policymakers must still guard against sudden cost shocks. Now, let's look at the drivers of inflation, at least from the divisional level and also by contribution to inflation. So the question is, what actually is driving inflation in the month of October? Which categories of goods and services had the biggest impact on overall price changes? That's the question we are seeking to answer with the data we have on this slide. As we can see from the table, food and non-alcoholic beverages remained the largest contributor, contributing 51% to overall inflation of 8% in October. So just that one single division called food and non-alcoholic beverages alone contributed over 50% to the inflation rate of 8% we recorded in October. Implication is huge. It means that food is very important, and when we make gains in food inflation, the gains translate directly into overall inflation. That's the implication. Now, even though its inflation rate fell from 11% in September to 9.5% in October. So what this means is that, yes, we are seeing a declining inflation rate for food, but it still is the largest contributor to inflation because it has a very big weight in the CPI basket. On month-on-month basis, food prices actually fell by 1% between September and October 2025, confirming that food costs were the main source of relief for households. This consistent slowdown shows that local harvests and improved supply are helping to ease food price pressures. Next, let's look at housing, water, electricity, gas, and other fuels. This ranked the second largest contributor to inflation in October, contributing 17.6% to the overall inflation. And this category recorded an inflation rate of 13.9%, down from 15.8% in September. On month-on-month basis, prices in this category were relatively flat, down by only 0.1%, suggesting that energy, rent costs remain steady but elevated. Ladies and gentlemen, I now want to look at the third largest contributor to inflation, which is clothing and footwear. Now here, this came in third as the largest contributor, actually contributing about 9.4% to the overall inflation, even though the inflation for this category also eased from 11% to 9.5%. On month-on-month basis, prices rose slightly by 0.4% for this category, likely reflecting retail restocking and festive demand in urban markets. The noticeable contribution of this group to inflation is largely on account of the fact that clothing prices tend to adjust slowly and are sensitive to imported costs and also seasonal demand. Ladies and gentlemen, the fourth major contributor to the October 2025 inflation was recreation, sport, and culture, contributing 6.6% to the overall inflation of 8% we saw in October 2025. And as we know, this category actually recorded an inflation rate of 15.1%, down from 16.6% in September. This group saw a modest month-on-month rise of 0.3% in prices as costs for entertainment and leisure services often adjust with seasonal activities. Then we have alcoholic beverages, tobacco, and narcotics, which ranked 5th in terms of contribution to inflation. And that category contributed 5% to the overall inflation of 8% in October 2025. In spite of inflation of this group dropping sharply from 15.4% in September to 10.4% in October, that's about a 5 percentage point decline, suggesting same normalization after previous supply side pressures and high distribution costs earlier in the year. Now, ladies and gentlemen, these 5 divisions alone altogether contributed around 90% to the overall inflation of 8% in October. But I must say that outside these top 5 contributors, we also see restaurants and accommodation services, education services, furnishings, household equipment and routine household maintenance, personal care, social protection and miscellaneous goods and services, information and communication, health, also contributing to inflation for the month of October. Now, ladies and gentlemen, let's notice that the transport division, which has been a major inflation driver in recent years, recorded a deflation of 4%. What this means is that the general price level of transport actually reduced by 4% compared to the same period last year. Now, if you compare this to the deflation of 3.9% last month, we are seeing an improvement, but the overall trend in transportation is very favorable for households. This deflation reflects stable or slightly lower fuel prices, which helped contain costs across other sectors. Ladies and gentlemen, in summary, inflation in October was driven mainly by food, as I mentioned earlier, housing and utilities, and clothing and footwear. But the overall contribution from these categories fell compared to September. The most striking trend is that nearly all major divisions recorded slower price growth, showing that inflationary pressures are easing across the board, not just in food, but also in services and in durable goods as well. The broad-based moderation in October inflation confirms that Ghana's disinflation process is firmly underway. Price stability is returning, and key drivers that once fueled double-digit inflation are now losing momentum. Now, let's now look at trends in the drivers of inflation. Between May and October 2025, the story of Ghana's inflation has shifted dramatically. Back in May, food and non-alcoholic beverages were driving inflation more than anything else, with prices rising by about 23%. By October, food and inflation had dropped sharply to 9.5%. This fall is the single biggest reason behind overall inflation slowing down to 8%. Inflation for insurance and financial services has also reduced drastically over the period, moderating from 16.9% in May to 2.8% in October. But while food inflation and insurance and financial services inflation have come down, most categories showed mixed results. Now, finally, transport costs have seen deflation since June 2025, as we can see. The message is that even if you want to keep inflation in single digits, we must protect the gains in the food inflation that we are making. Like as I said earlier, because food wields a very important weight in the CPI basket, any gains we make in food actually brings overall inflation down. Now, ladies and gentlemen, Let us now look at disaggregation of food inflation by subclasses. Vegetables and tubers recorded one of the biggest drops in inflation. Its inflation fell from 44% in February to 0.1% in September, but it inched up slightly to 1.3% in October. Their prices, however, fell by 5% between September and October. Then if you take cereals and cereal products, we've also seen some easing. In fact, its inflation is sharply from 26.6% in September before inching up to 7.4% in October. Their prices, however, dropped by 0.4% between September and October 2025. Meat inflation declined to 15.4%, while prices of ready-made food slowed to 12.4%. Now, let's look at the top 20 contributors to inflation for October 2025. And here we are looking at this particular trend by items. So in other words, if you take the 307 items that the Ghana Statistical Service follows to measure inflation and to look at the trends of inflation, you want to look at which of these items are contributing the most to inflation. And here, remember that anytime we talk about contribution, we are looking at the combined effect of the weight that the item wields in the basket, as well as the inflation rate of that particular item. Even though inflation eased to 8% in October 2025, the details show that some items are still driving prices higher. The single biggest contributor this month is smoked herrings. They contributed 5.9% to the overall inflation of 8%. Now note that I'm dealing with inflation of 8% for October, and there are 307 items. Out of these 307 items, smoked herrings alone contributed 5.9% to the 8% inflation we are seeing. Not 5 percentage points, but 5.9%. In other words, if you liken the 8% to 100%, smoked herrings alone attributed or contributed 5.9% to the inflation of 8%. And this is so even though their inflation dropped from 23.8% in September to 16.4% in October, a drop of 7.4 percentage points. This is significant. So the point here is that yes, smoked herrings contributed the highest to inflation, but in terms of trends, we are seeing a moderation in inflation for smoked herrings, which is good news for households. But I must say that its inflation rate of 16.4% in October is still high, and we have to do more to bring its inflation down. Now, their prices reduced by 2% between September and October, which is looking at it month to month. What this tells us is that the big annual impact comes from its sizable weight and still elevated yearly price levels, even though October itself brought some relief. For many families, as we know, fish is a key source of protein, so this decrease is felt immediately at the dinner table. Ladies and gentlemen, green plantain is the second largest driver of inflation in October 2025, contributing 5.6% to the overall inflation of 8% in October. The inflation for this item increased significantly from 14.6% in September to 61.6% in October, an increase of 47.4 percentage points. On month-on-month basis, prices of green plantain increased by 8.1% between September and October 2025. In short, extreme annual inflation overcame the small weight of this particular item and pushed green plantain near the top of the list with regards to contributions to inflation. The prices of cinema and cultural services was actually the third largest contributor to inflation in the month of October 2025, contributing 5.1% to inflation. Whilst its year-on-year inflation reduced slightly from 53.8% in September to 52.9% in October, there were no price changes between September and October. In fact, the key message here is that it is the annual rate that is doing the work, as the monthly momentum is actually neutral. The fourth largest contributor to October inflation is cooked rice, also with a contribution of 4.6% to inflation. Now, cooked rice saw an inflation of 14.2% in October, almost the same as the 14.6% posted in September 2025. The price of cooked rice increased by 1% between September and October 2025. Now, because cooked rice is widely consumed, even moderate inflation translates into meaningful national impact. So this is one item we need to watch carefully. And then the fifth largest contributor is charcoal, contributing 4.6% to the overall inflation. Charcoal, however, witnessed a significant drop in inflation from 43.8% in September to 37.7% in October. Prices of charcoal increased by 0.5% between the 2 months. The annual impact remains sizable due to earlier price levels, but October momentum cooled sharply. If you take all these five, the top five that I've mentioned, and you put them together, their combined effect is that they altogether contributed 25.8% to October overall inflation of the 8%. So in other words, if we liken the October 8% inflation to 100%, 25.8% of it came from just these five items that I've mentioned, which is smoked herrings, green and cultural services, cooked rice, and charcoal. The rest of the top 20 contributors are listed, and they include ginger, vegetable oil, water, beef, cassava. I'm talking about both cassava, dough, river fish, kinky with fried fish, onions. I'm talking large onions, accommodation, fufu and soup, yam, and then public/private secondary school fees. The good news is that 5 items out of the 20 contributors to inflation all witnessed price declines between September and October. So let's see that these items are contributing. However, these items declines. These are smoked herrings, vegetable oil, cassava, and I'm talking about cassava and cocoa, and then hotel accommodation in October. But then between, we also saw that their prices did what? Reduce significantly. Now, it is important, after looking at the top 20, to also look at the top 20 high inflation items. Let me make a quick distinction between what we mean by top contributors and top high inflation items. Like I said earlier, for the top 20 contributors, we are looking at the impact of some of their weights and then their inflation combined. And then for high items, we are considering only their inflation rate. Here we are disregarding the. So when you are talking about drivers of inflation, you need to zero down on both the weight and the inflation, which is the previous one I just ran you through. Now let's look at inflation just in terms of the rate of change in prices of these items. Now at the top of the list is ginger, which recorded a year-on-year inflation rate of 94.1%. Even though this is a slight drop from the September's rate of 113.8%. It remains the single highest inflation rate among all items. Ladies and gentlemen, ginger's price have stayed extremely volatile all this while because of its strong seasonal production and limited market supply. Is ginger 8%, meaning between September and October 2025, showing that the price spike is easing, but still far above last year's levels. In the second place is green plantain, with inflation soaring to 61.6%, up from 14% in September. That's a jump of 47% in just 1 month. Is food, and its price surge reflects local supply and high transport costs during lean seasons. On monthly basis, 0.1% after earlier. Price high are still active, not just residual from last. Third on this is cinema service, with an inflation only slightly down from 53.8% in September. This suggests that and how different parts of the country are feeling the effects of disinflation. At the top of the chart, the Northeast region recorded the highest inflation rates in the country at 17.3%. That's down from 20.1% in September, but still more than double the national average. This shows that while prices are finally easing in the Northeast, they remain elevated. The main drivers here are food prices, which tend to fluctuate more sharply due to supply and transport constraints. Many markets in the region depend on produce transported from long distances, and when fuel or logistic costs rise, they feed directly into local prices. Encouragingly for this region, the month-on-month inflation for the region fell by 0.8%. In other words, between September and October 2025, we actually saw inflation fall. And this is after it peaked, after a peak of 10% in September, a clear evidence that the price pressures there are starting to cool. Now, let's look at the other extreme, where in the Bono East region, inflation rate was 1.1%, slightly down from the 1.2% we saw in September. Bono East also posted the sharpest month-on-month decline. In fact, we've seen prices fall by 3% between September and October 2025 in the Bono East region. So not only did we see the lowest annual year-on-year inflation in Bono East region, we also saw price declines between September and October in the Bono East region. This stability reflects the region's strong local food production, good market connectivity, and shorter transport distances. It is an example of how strong harvests and efficient supply chains can shield consumers from broader national price pressures. Between the two extremes that I just mentioned, most regions are now showing moderate single-digit inflation, another sign that price stability is spreading nationwide. Ladies and gentlemen, I won't finish the story if we don't talk about Greater Accra and Ashanti region. In Greater Accra, which carries the heaviest weight in the national CPI, we've seen inflation at 6.8% for the region, dropping from 7.7% from last month. On month, prices actually fell by 0.6% in the region, showing clear disinflation, both food and housing costs. Now, Accra's influence is critical because of its large urban consumer base. When inflation slows here, it tends to anchor the national rate. In the Ashanti region, which accounts for about 21% of CPI basket, we've also seen meaningful drop in inflation from 10.7% in September to 8.4% in October. Month on month in Ashanti region, we've also seen prices reduced by 0.1%, supported by lower food and transport costs. Together, Greater Accra and Ashanti contributed nearly 3 percentage points to the national inflation rate. Both are moving firmly in the right direction. Now, in the region, Western inflation were mixed. East 0.2%, saw a more from both above the national average, largely because of steady housing and energy costs. In the are beginning to adjust downward as market supplies. This improvement came mainly from falling food prices after a strong local harvest. Now, among the low inflation regions, Ahafo recorded 6.2%, Oti stood at 4.8%, and Savannah stood at 2.5%, all continuing to enjoy mild price environments. The takeaway from the October inflation numbers is that every region recorded stable or falling inflation. 2, the gap between the high and lowest regional rates from 17.3% to 1.1%, but is gradually narrowing. The third point to note is that confirm that disinflation process is not limited to urban centers, but spreading across rural and regional events remain foot and access to markets. Secure and connected, such as East Ghana, benefiting the most from inflation. Meanwhile, regions in the north, where supply chains are longer and more expensive, continue to face higher costs, though the direction is now clearly downward, as they now do. In simple language, inflation is falling everywhere, but not at the same pace. Sustaining this progress would depend on improving logistics, strengthening regional food storage and distribution systems, and ensuring that lower transport costs are passed on to consumers across all parts of the country. Now, ladies and gentlemen, what are the key takeaways from the October 2025 inflation release? I want us to wrap up with first, the top high inflation items. The top 10 high inflation contributors, the top 5 high regional inflation, and also the top 5 regional inflation contributors. Now, as I mentioned earlier, the items that top the chart in terms of high inflation are ginger, green plantain, cinema and cultural services, cashew, lime, charcoal, avocado pear, dark beer, and palm fruits. In terms of the items that contributed the most to inflation, in descending order, we have smoked herrings, green plantain, cinema and cultural services, cooked rice, charcoal, ginger, vegetable oil, tomato paste, electricity, and resold tap water. Now, ladies and gentlemen, with regards to the top 5 regional inflation, we have the Northeast. In fact, these 5 regions, if you combine their contribution to inflation, they are looking at 28%. And then if you look at the top 5 regional contributions, we have Greater Accra, Ashanti, Eastern, Western, and Central. If you pick these 5 regions that contributed the most to inflation, their contribution is about 77%. Now, ladies and gentlemen, the message is very clear. The headline message is that inflation is falling, and it is doing so consistently. Inflation is easing across sectors, across goods and services, and across regions. In October 2025, Ghana recorded a year-on-year inflation rate of 8%, down from 9.4% in September, and far below the 23.8% recorded at the end of 2024. This marks the 10th consecutive month of decline and the lowest inflation rate in 4 years. Month-on-month, inflation was negative 0.4%, which means that in October than in September. That's a sign that inflation is not only moderating, but it's also stabilizing. The drivers of this improvement include the following. Number 1, food inflation, which fell to 9.5% from 11% in September, continues to lead the disinflation process, supported by improved local harvest and better supply in key markets. Number 2, non-food inflation eased to 6.9% from 8.2% in September, showing that costs beyond food, such as housing, clothing, and transport, are also coming under control. Number 3, goods inflation slowed to 9.3% from 11.2% in September, while services inflation remained low at 4.6%, highlighting that the biggest price relief is being felt in goods households, in the tangible goods that households buy the most. And then 4, locally produced items saw inflation fall sharply to 8% from 10.1% in September, while imported goods rose slightly to 7.8%, up from 7.4% in September, reflecting stronger cedi and stable global prices. Across the regions, every part of Ghana recorded lower or cedi inflation. The Northeastern region still has the largest rate at 17.3%, but it's now falling fast. Bono East at 1.1% continues to enjoy the lowest inflation in the country, showing how strong local food supply and efficient distribution can deliver real price stability. Now, ladies and gentlemen, the inflation picture for October is summarized from the year-on-year perspective as follows. That in October, the inflation rate was 8%, down from 9.4% in September 2025. And this inflation is explained by inflation on locally produced items, which reduced to 8% in October from 10.1% in September. And inflation for imported items, which increased to 7.8% from 7.4% in September. Again, ladies and gentlemen, the 8% inflation is also influenced by food inflation, which moderated from 11% in September to 9.5% in October, and non-food inflation, which moderated sharply from 8.2% in September to 6.9% in October. But regional differences also influence the 8% inflation, with the lowest 1.1% recorded by Bono East and the highest 17.3% recorded by Northeast region. Then on month-on-month basis, the picture is even better because we saw a lot of negative inflation. Negative inflation means prices are actually falling between the 2 months. So what did we see? In October, between September and October 2025, inflation was negative 0. That the general price level fell by 0.4%. If you compare this to September, where the general price level actually increased by 0.9%, it's a remarkable improvement. This deflation we saw in October 2025 is explained by a deflation in food of 1% and an inflation of 0.04% inflation. Inflation release, which shows that inflation moderated to 8%. The recommendations are very clear. For households, lower inflation is a signal to plan ahead, to buy, avoid unnecessary spending, and save when possible. The cost of living is stabilizing, as we are seeing, and families can start to rebuild their resilience. For businesses, the lower is to plan, to expand, and to innovate. So businesses must take advantage of that and do. In fact, companies should use this time to cut waste and strengthen partnerships with local suppliers. Pass on part of these savings to consumers will not only build goodwill, but also strengthen competitiveness as the economy stabilizes. For government, the recommendation is to continue to maintain fiscal discipline. Fiscal restraint and policy consistency are crucial to lock in these gains that we are seeing. Resources should focus on food systems, storage, and irrigation, as food remains the most powerful lever for inflation control. Reducing regional must also remain key for government. In closing, ladies and gentlemen, there are 25 to price stability. But sustaining this progress will require collective efforts from governments, from businesses, and every household. Stable prices are not economics, about peace of mind. In fact, knowing that the cost of tomorrow won't overwhelm the efforts of today is very, very important for every single individual. Let's keep working together to make stability not just a head, but a habit. Let me use this opportunity to express my appreciation who work effortlessly to ensure that this work goes on. All of them contributed indirectly in making this work possible. And to that, I say thank you very much. The full bulletin, this infographics are available on our website after this release for those who wish data in depth. And my team stands ready for verification where needed. Ladies and gentlemen, Statistical Service remains committed to delivering accurate
Thank you, Dr. Alhassan, for the presentation. They are very comprehensive, and we have 49 participants online, and we are about the same number here in person. So, ladies and gentlemen, the October CPI and inflation figures have been released. We invite you, if you have any question or any clarification, please let us show by hand so that the mic will come to you for you to pose your question. And those online too, you can put your questions in the chat box so that we can address it. Any question?
Your name and your media house. Yeah, Doc, thank you for once again your very elaborate presentation. We had a little breaks in the line, but that's a bit of a challenge. But by and large, we heard everything you said. The way you present these data points makes it difficult to really carve out questions, because you want to always preempt our questions and answer them ahead of time. And then you still ask us to ask you questions. Doc, how is that feasible? I only just want to just, you know, if I look at that, the trajectory of the currency, this month I expected the decline to be a little lower because of what we suffered sometime in August, September. So to having had a decline from 9.4 to 8% brings back the call I made that I'm expecting inflation around 5% by close of year. From your end, when you go to the market and you have, what do you call it, messages you give to, the takeaways you give, beyond that, I know sometimes have government here as well. Think you not that when government specifically starts doing big ticket expenditure, would that have any effect on the inflation rate? Thank you.
Okay. So let me take a few more, and then I can answer all of them together.
Your name and your media.
Okay, Doc, please, this is Abdullah Dasmani from Peace FM.
Okay.
Yeah, Doc, my question is...
Yes, please go ahead.
Please, Doc, you said? Oh, okay. So please, my question is...
Go ahead.
My question is, we have all witnessed that the inflation has dropped again in the month of October. But this is the case. When we go out to do the publication or we go out to publish the story, our viewers and followers keep asking that, why is it that inflation is going down? But yes, still when they go to market, things are still expensive within the various markets. So is there